Imagine waking up one morning and your company is worth $47 billion. By midnight, it's worth almost nothing. Not because of a hack, not because of a scandal, because of one document. One single document that nobody saw coming. This is the story of WeWork and what really happened behind the closed doors of the most spectacular startup collapse in modern history. Let's go back to the beginning, because this story starts not with failure, but with the kind of success that makes people genuinely believe someone is a genius. Adam Neumann co-founded WeWork in 2010. The pitch was simple on the surface. Rent office space, divide it up, add some free coffee and exposed brick walls, and lease it to freelancers and startups who wanted to feel like they were part of something bigger. That's it. That was the core idea. Co-working spaces had existed before WeWork. None of that was new. But what Adam Neumann had that nobody else had was a story, a vision, an energy in every room he walked into that made investors open their wallets before they even sat down. Neumann didn't sell office space. He sold a movement. He said WeWork wasn't a real estate company. It was a consciousness-elevating community that was going to change the way humanity worked. He said things like that with a completely straight face, and people believed him. Venture capital firms threw money at WeWork like they were trying to put out a fire. By 2019, SoftBank, the Japanese investment giant, had poured in billions of dollars. WeWork was valued at $47 billion. $47 billion. For what was, at its core, a company that signed long-term leases and rented them out short-term. Now here's where it starts to get interesting. In 2019, WeWork decided to go public, an IPO, an initial public offering, where a private company sells shares to regular investors on the stock market. To do that, they had to file a document called an S-1 with the Securities and Exchange Commission, and that document had to show the public, for the first time ever, exactly what was going on inside the company. What investors saw when they opened that document stopped them cold. WeWork was losing money at a speed that was almost hard to comprehend. In 2018 alone, the company lost $1.9 billion. Not revenue, losses. For every dollar coming in, far more was going out. The leases WeWork had signed were long-term, sometimes 15 or 20 years, but the subleases they sold to tenants were short-term, sometimes month to month. This meant if there was ever an economic downturn and people stopped renting, WeWork would still owe landlords billions in rent with nobody to help cover the bill. But the financial problems were just the beginning. The S-1 also revealed something about Adam Neumann personally that made even the most optimistic investors raise an eyebrow.
Neumann had trademarked the word "we," and then sold the trademark back to his own company for nearly $6 million. Let that land for a second. He charged WeWork almost $6 million to use the word "we" in its name. The company paid him. Analysts also discovered that Neumann had borrowed hundreds of millions of dollars from WeWork and that he had purchased buildings personally, buildings that WeWork then rented from him. He was, in effect, his own landlord, and he was making money coming and going. On top of that, Neumann had been granted something called super voting shares. This meant that even though he owned a minority of the company, he had enough voting power to make almost every major decision unilaterally. WeWork's own board couldn't easily override him. The reaction from Wall Street was swift and brutal. Analysts who had been excited about the IPO suddenly started doing the math. They realized that even the $47 billion valuation was almost entirely based on Neumann's storytelling, not the underlying business. Independent valuations started coming in. Some said WeWork was worth $10 billion, some said $5 billion. Some said the company was essentially insolvent if it stopped raising new money. Within weeks of that S-1 filing going public, the IPO was shelved. The offering that was supposed to make WeWork a household name on the stock market was dead. And what followed was a collapse so fast it looked like a controlled demolition in slow motion. SoftBank, which had backed WeWork so heavily, was now forced to make a painful decision. They came in with a rescue package, but the terms were humiliating. As part of the deal, Adam Neumann was pushed out as CEO. He was given what amounted to nearly $1.7 billion in exchange for reducing his voting power and stepping aside. Yes, the man who ran his company into the ground walked away with nearly $2 billion. The internet did not take this quietly. Thousands of WeWork employees lost their jobs. The layoffs hit hard. About 2,400 people were let go in November of 2019 alone. These were people who had believed in the mission, who had taken stock options instead of higher salaries because they thought WeWork was going to the moon. Instead, their options were worth nothing. Some couldn't even afford the COBRA health insurance they needed after losing their jobs. WeWork briefly offered to pay for it, funded ironically by Neumann's exit package. So what actually caused this? What really happened? The short answer is that WeWork was a real estate company pretending to be a tech company. Tech companies get sky-high valuations because software can scale infinitely. You write code once and sell it 1,000,000 times. Real estate doesn't work that way. Every new location costs money. Every new lease is a new liability. WeWork's business model only worked in a booming economy where demand never dropped. The moment anyone stress-tested the model, it broke. But the deeper answer is that the entire era allowed it. The 2010s were a decade of cheap money, low interest rates, and a venture capital culture that rewarded growth at all costs. Investors didn't want to hear about profits. They wanted to hear about user numbers and expansion. Companies like Uber, Lyft, and others had burned through billions without turning a profit and were celebrated for it. WeWork looked at that environment and played the game perfectly. They used the language of Silicon Valley, community, disruption, consciousness, to disguise what was fundamentally a lease arbitrage business. Adam Neumann, to this day, is not in prison. He was never charged with a crime. In 2022, he raised money to start a new company called Flow, a residential real estate venture, and Andreessen Horowitz, one of Silicon Valley's most powerful firms, invested $350 million in it. The startup world is sometimes very forgiving of the right kind of failure. WeWork itself filed for bankruptcy in November 2023. The company that was once worth $47 billion listed assets of around $15 billion and debts of close to $19 billion. It was over. And here's the thing that stays with you after you've gone through all of it. Nobody lied about the product exactly. The offices were real. The coffee was real. People genuinely liked working there. What was fake was the story layered on top of it. The idea that renting desks to freelancers was a civilizational-altering mission worth nearly $50 billion. In a world where narrative and vision can be worth more than revenue and profit, WeWork wasn't a bug, it was a feature of the system. And until that system changes, there will be another WeWork. There already might be one right now, and we just don't know it yet. If this breakdown hit different, share it with someone who still thinks billion-dollar valuations mean a company is actually healthy. And stick around, because next we're going deep on the startup that actually did pull off the impossible comeback after everyone counted them out.